Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 3rd of October 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. And it's a story of differing fortunes really this morning. Both the euro and the pound sterling making gains against the US dollar yesterday. The euro bouncing back by around 0.28%, the pound by 0.12%, though sterling still remains below that key 130 level. But in Australasia it was a completely different story, with both the Australian and New Zealand dollars giving ground against the greenback. The dollar index for its part trading at 95.33 off the top, down by around 0.14%. Perhaps the dollar rally pausing for breath, maybe running out of steam. We want to bet the house on that just yet. But you wouldn't know it from the dollar's performance against the Indian rupee, up yesterday by 0.53%, and the Indian rupee trading above 73 against the US dollar. Okay then, what's on the calendar? Events that may move the markets today. A pretty compact calendar, nonetheless, one that's full of important data and content. We've already had building permits and building approvals data out of Australia, not for July as the calendar says, but indeed for the month of August. And as we'll see later, there was a very disappointing read in that data. To come at 0620 GMT, the first of the day's central banker speeches, this from the ECB board member Mersch. At 7:15 GMT, we shall hear from Spain and the market services PMI read for the month of September. And then at 7:55 we'll have composite PMI and services PMI data out of Germany, and that'll be followed 5 minutes later by similar data for the whole of the Eurozone for the month of September. As ever, potentially a chance to infer something about the wider Eurozone read from the German data released 5 minutes prior. At 8:30 we shall have services PMI data out of the UK for September, and that then a pause until 12:15 GMT when we jump over the Atlantic for the ADP employment change data for the month of September again. This data takes on a special significance, of course, this week, coming as it does just a few days before non-farm payrolls on Friday. At 13:45 then we shall have services and composite PMI reads out of the US for September, and that'll be followed at 1400 by the ISM non-manufacturing PMI, also for the month of September. Now, of course, the US has been the one bright spot really as far as PMIs have been concerned of recent times, so the pace of global growth probably depends largely on the US data to some extent. And then break until 1800 tonight, when the FOMC member Brainard will be speaking, followed by FOMC member Meister at 18:15, and then at 8 o'clock 2000 GMT, Jerome Powell, the Fed chair, will also be speaking once more. If you're still in the market at 23.50 this evening, then you can catch foreign investment in Japanese stocks and bonds for the week of August 31st. Okay then, breaking news and comment that's caught my eye overnight. And first of all, the Indian rupee is traded at an all-time low this morning versus the US dollar, despite government efforts to bolster the Indian currency. And this is of course the latest in a series of EM currencies to come under increasing pressure. Australian building approvals had fallen sharply in August, down by 9.4% versus expectations of 1% growth. This is likely, or potentially likely, to act as a drag on the wider economy. House prices have been cooling quite quickly in Australia, and the lack of construction potentially points to sort of weakening confidence and weakening economic activity. US Defence Secretary Mike Pompeo will return to North Korea at the weekend, it's been revealed, and he will resume talks on denuclearising the nation with the Pyongyang government. Would be interesting, wouldn't it, if Donald Trump could pull off a further coup before the US midterm elections. Okay, food for thought and something to take away with you into the trading day and beyond, so why not think about this? And as we've said, we are now just a month away from the US midterm elections. Donald Trump's USMC trade deal has likely bolstered Republican chances at the polls, yet the Democrats are still expected to make significant gains in Congress with the potential to regain control of the lower house. US government spending and the national debt may be a deciding factor for voters. There are grave concerns about the ability of the US government to finance and fund its ever-growing national debt and to meet its impressive spending plans for the balance of Donald Trump's term. This chart from ING tries to put some of that into perspective. The inverse mountain area is basically the size of the US budget deficit, depending upon the president, or it's colour-coded depending upon the president, I should say. Red for Republicans and blue for Democratic presidents. What's interesting is this is the federal deficit measured as a percentage of GDP rather than just a headline number. And the chart shows that, interestingly, despite all the publicity, the current budget deficit is significantly lower on this basis than that under the Democrats in 2009-2011. And what's more, GDP is actually starting to pick up strongly under Donald Trump. So these are the kind of numbers that people will be looking at when they come to decide who to vote for in those midterm elections. Okay, time to read the risk warning. Please take a moment to read this risk warning carefully. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. Thank you for your time.